In other words, what kind of access is the Federal Reserve going to give to the new digital finance players? Just over the last couple of days, Kraken, which is a cryptocurrency company, was given access to the Fed, master account of the Fed. So that means that they can settle in central bank money. That's sort of the gold standard. I think I'd like to see the Fed go farther in this direction. Because
this last post, and then after you're done sharing something about the Fed, I want to take you guys back to what this dude here said about Kraken getting access to the Fed in 12 to 24 months. So I'll play this after Aqua shares his piece. But coming back over here, the last take that I have on just highlighting that key word today for the sake of the first portion of today's call, which was opportunity. We have Credit Union 40 Group posting this 2 days ago on their LinkedIn profile, and it says, join Jed Meyer, CCE, Justin Burleson, David Pierce, and John Ungerland as they cover digital assets, stablecoins, and tokenization, which are reshaping financial services, and find out how credit unions have a rare opportunity to seize a competitive advantage in this quickly evolving market. And so just take out that word credit unions for a second and replace it with retail investors. It's the same thing, right?
Yeah,
we have a rare opportunity to seize a competitive advantage in this quickly evolving market. And this is one of those events that gets shared in our private CYPRX Discord. I signed up for it. I'll be attending this webinar, right? Sitting alongside, I'll probably be one of the only retail investors that's sitting alongside credit unions listening into this event to learn how, core capabilities and fintechs are racing to replicate stablecoin functionalities, secure digital asset safekeeping, lending against tokenized assets. So there's DeFi right there. Exchanging access, deposit products, and new interchange-driven revenue opportunities. Look at that. Revenue opportunities right there.
Yeah, especially the DeFi part too. They didn't have to. Yeah, this FedNow article goes hand in hand with this as well. Do you want me to share it right now?
Yeah, 100%, bro. Pull that up real quick. Add it to the stage.
All right, let's see here. So yeah, FedNow. This article titled "Instant Payments is in Focus," an inside look at the FedNow service. And I highlighted a couple areas. I'll just read through it here real quick. The first highlighted area says, today, nearly 1,700 financial institutions participate on the service. FedNow service growth has accelerated steadily since launch. And new tools and innovations are broadening the range of popular instant payment use cases. Now, out of that 1,700 financial institutions, I will mention there are some credit unions on this list that are in the Metallicus Banking Innovation Program. And let's not forget that Metallicus is a service provider on the flip side to that list for the FedNow. And they're the only ones that have 4 check marks. So for those of you that are like, why are we reading the FedNow article, right? That's to, kind of give you some peace of mind. But let me continue to read here because it gets really, really bullish. So this next highlight area, I said, on the business side, use cases such as instant B2B vendor payments and corporate treasury fund movements are gaining real traction, especially now that our higher $10 million transaction limit supports more complex, high-value flows. Insurance disbursements are another area of positive momentum. Instead of mailing checks, carriers are paying providers and policyholders instantly, which reduces administrative friction and dramatically improves the customer experience. And this next part is quoted, for consumers, earned wage access and gig worker payouts continue to stand out. People are increasingly expected to be paid instantly at the end of their shift, and institutions are leveraging the FedNow service to meet that expectation. Keep in mind, XPR Network can run payroll services on this caliber. So just throwing that out there, but let me continue to read. It says, we're also seeing more financial institutions enable account-to-account transfers that let customers move money instantly between their bank and brokerage accounts, which helps them proactively manage their investments. With instant payments through the FedNow service, credit unions and banks can disperse auto loans instantly, right? DeFi, including on nights and weekends, ensuring auto dealerships get paid in seconds, no matter the time of day, and the buyers can drive off the lot without delays. Real estate is another exciting area. Instant payments enable closings to be finalized after hours or on weekends without being constrained by wire cutoff times. This next part is another quote from this guy from FedNow. He says, when I talk to the financial institutions, the pain points I hear are about very real, are very real, whether it's settlement and delays, cutoff times, weekend and holiday blackouts, or customer frustrations about not having immediate access to their funds. The FedNow service is designed to eliminate those friction points at their sources. And it continues, he says, that additionally, with the speed, finality, and data-rich ISO 222 messaging built into our service, we're helping financial institutions reduce errors, streamline exception handling, and meet rapidly rising expectations for immediacy. These capabilities go far beyond simply moving money faster. They improve the experience for consumers and businesses alike, from payroll timing to urgent disbursements, alleviating long-standing operational burdens while delivering the modern, instantaneous experience customers now expect. And this is the highlight that goes hand in hand that Cypress was pointing out. It says here, what's ahead isn't just about incremental upgrades. It's about ongoing modernization of how money moves in this country. And we'll keep collaborating with the industry, learning, leaning in, and leading where it's appropriate for us to do so. This is an incredibly exciting time to be in payments. The pace of change is rapid, the opportunities are real, and financial institutions of all sizes have a chance to shape the next chapter. My message to the banks and credit unions is simple: seize the moment and join us in this transformative journey. And that's the end of it.
And when was the date of this? April 7th, right?
Yeah, a few days ago, a couple days ago.
Nuts, bro. You know, you ask the average individual that's walking out there on the streets right now what the Fed just said about digital payments and the, you know, change of the financial system. They're going to be like, who the heck is the Federal Reserve?
Yeah.
You know?
Yeah.
So the fact that just anybody listening into this just knows now what the Fed just said about this instant payments and how it's in focus. Just
I got one other share too to put the cherry on top of this, and this is shout out to I forget, it might have been Rhino. I think he had posted this screenshot, and I'm not too sure. It sounds like he has a bank account over at SoFi Bank, which is basically an online bank, right? And they're on the list of participants for the FedNow service, right? But peep this. Let me share this with you guys. This is just last. And this is just proof that it's coming, right? So hold on. Let me see here. Yeah, that's a great idea. Hold on. Yeah, give me a moment. Yeah, let me do that, and then I'll come back.
While you're doing that, I'm going to share this video of this dude here real quick from the Future of Finance Summit that took place in 2026 from just a month ago from the Bretton Woods Committee. Let me just give you guys this dude's credentials. He's William C. Dudley, Chair, Bretton Woods Committee, former president and CEO of the Federal Reserve Bank of New York, right? So not just some random dude. And we remember here what he says about Kraken gaining access to the Fed in the next 12 to 24 months, which is just huge that a crypto exchange is going to have this type of access. Listen to what he says here.
Role to play in this as well? In other words, what kind of access is the Federal Reserve going to give to the new digital finance players? Just over the last couple of days, Kraken, which is a cryptocurrency company, was given access to the Fed, master account of the Fed. So that means that they can settle in central bank money. That's sort of the gold standard. I think I'd like to see the Fed go farther in this direction, because at the end of the day, cash at the Fed is the safest asset you can hold. There's no liquidity risk. There's no settlement risk. There's no default risk. Farther in this direction, because at the end of the day, cash at the Fed is the safest asset you can hold. There's no liquidity risk. There's no settlement risk. There's no default risk. So having digital finance companies that can actually settle at the Fed, I think, is actually the best case. Now, you can't go to that instantaneously because you don't have the regulatory regime in place to basically put the rules for the digital finance industry on the same plane as what exists for commercial banks. So we're sort of in the process now of going through the conceptual phase to the implementation phase. And, that's going to play out over the next, I'd say, 18, 24 months. Then we'll sort of see what the true rules of the road are at the regulatory level. And then I think once
Did y'all hear that? We are in that implementation phase over the next 12 to 24 months where we're about to see this. And think about it. Like, why the heck would they be giving a crypto exchange access to central bank money if, like, I can't even explain how much liquidity is about to come into crypto. It's so crazy. That is nuts.
Yeah. Trillions, bro. Trillions.
Is this what you wanted to bring up right here?
Oh, yeah. Let's let me share this real quick here. Where's my screen at? Let me see if I can blow this up. All right, can you see it pretty good?
Yeah.
All right, so this was an update to somebody who banks over at SoFi. And it says here, we've made some updates to the SoFi Bank deposit account agreement, blah, 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 blah. But the main highlight right here, and it's dated April 8th, yesterday, or 2 days ago, 2026. It says here, we're rolling out the ability for SoFi checking and savings members to send instant transfers via the FedNow service to eligible and external institutions. These transfers are available 24 hours a day, 7 days a week, 365 days a year. You'll receive a notification as soon as this is available to you. So we about to go live. That's what that sounds like.
Yeah, man, I'm telling you. And it just goes hand in hand with these summits and these things that are taking place. I got 2 more video clips to share with you guys to kick off the remaining portions of today's call. But this 40 group stablecoin tokenization CU summit or not summit webinar that's taking shape. If you want to attend summits like this, all of this stuff, everything that we've posted so far is all available inside the private CYPRX Discord in the research section. But I signed up for this, and it says right here, look at this. St. Cloud's Financial Credit Union will share how it surpassed acquiring 12.6 Bitcoin, representing more than $800,000 held on behalf of its members through its credit union digital asset vault, a core integrated hybrid custody model with Deland's LLC C2C or coin to coin, I believe, Midas platform. Their experience proves that members want to explore digital assets without having to leave institutions that they trust. And this is everything that they're going to go over. So, this is just such a crazy opportunity to be alive right now in this space and just take advantage of learning all this stuff, listening to these panel discussions and just seeing what's happening in the digital transformation. Last but not least, these 2 clips right here. This is, I forget this lady's name. Hold on. Let me look her up real quick. Samara Cohen. Sorry, not her name. I just forget her status. Hold on. She is the senior managing director and global head of market development for BlackRock, right? And she was sitting on this panel discussion, which, look at this. This is crazy to me. The algorithms, I don't know if you guys listening in have realized this, but the algorithms are like, they're suppressing this information. They're keeping this information on the wraps. This has 67 views. You would think that a lady, a representative with her stature sitting, actually, as a matter of fact, I'm pretty sure in 2025, she won the most important woman in all of finance award. Like, she's like one of the most important ladies in finance in 2025. She won that award. And listen to what she says here. They talk about how more GDP will flow into public blockchains. And then she hits the time horizon outlook with the 6 to 12 month outlook. So I'm going to play 2 clips back to back.
Thesis on all this stuff is tokens and equity. It's all just converging into one. And in 5 years, we won't say, oh, there's tokens and then there's equity. It's all just one thing. And I think the thesis is also that more and more capital every single year will just flow onto public blockchains. And I don't know what those blockchains will be, but I think if you look at what Visa is doing, who just presented, and what Stripe is doing, they're just more GDP will come onto public blockchains.
Yeah, I think that's right. I think more of GDP will come onto public blockchains. And so the question is the pace at which that happens and where the demand comes from. I think in the US and Europe, investors.
That's it. That's all that needs to be said. You have the freaking global managing director at BlackRock saying that she believes that more GDP will come on the public blockchains.
Yeah. Tokenization of real world assets.
Like, in a bear market, in a pullback, You got like you would have never heard this back in 2020, 2021. BlackRock wouldn't be sending electors on stage saying this stuff publicly,
Yeah.
which is crazy to see. All right, next here is where she goes on to give that time horizon, 12 to 24 months, or she says 6 to 12 months, my bad.
Interesting that, these are two very distinct paths, and we will see them play out in parallel.
Yeah. When you look out at the next several months, do things feel, so we had Genius, but even like clarity and just global market structure, are you able to predict what the next 6 to 12 months looks like? Or do you feel like now is at this moment in time where everything's up in the air?
I can't predict what's going to happen after the next 6 to 12 months, but I think it's pretty clear that over the next 6 to 12 months, and you guys have seen evidence of this discussed over the last 24 hours, we are going to see a number of new models of tokenized securities and of payments coming online in the United States. So the big question that will be answered as they come online is, how do they work together? Particularly, should we have like a stressed market event? Are there dislocations? Are there things that really like undermine on a broad basis participation in the markets? Or what are the things that investors actually find the most useful? And I thought there was a session earlier with Austin around the importance of the utility of public blockchains. And I think something that will be really important over the next 6 to 12 months is how the models that have open standards self-improve to create interoperability, to enforce price alignment, and to aggregate liquidity. And how that plays out will define what things look like after that 12-month period. But I think it's going to be a pretty period of aggressive and important learning as these things come online in markets.
Yeah. Are there any important?
Aggressive and important learning. Like,
She had the option too to say it's up in the air. We don't really know. And she decided to give her prediction.
6 to 12 months, everything coming online. I mean, it's getting closer and closer to the point where we can continue to try to deny it and prolong it and push these dates out, this and that. But eventually, these institutions will feel comfortable with regulations in place to flood in at scale, that is a scale that we have never seen before in the 17 years of crypto's history. We've never seen an institutional utility cycle ever. I mean, 4 trillion, we hit what, $4.24 trillion in market cap. There's organizations out there that process that monthly, I mean, there's probably organizations out there that process that daily.
Yeah, no doubt.
So very early days.